Howdy, my friend, welcome to Squirrel on Charts, your resource for advanced trading education. Today's video is all about the moving average and 3 major mistakes many traders make. First of all, it's no wonder that the moving average is loved by many traders. The moving average is extremely easy to use and understand. You don't need to do much interpretation in order to understand the signals. In addition, many traders love trend trading, and the moving average is one of the most popular indicators for trading the trend. It's being used by both traders as well as automated trading systems. As a result, the market often reacts to the bands. But there are some problems that often occur when trading with the moving average. The most common problem is the market just breaking through the moving average without turning around. Next, if the market turns, it often doesn't turn as expected, and you might get stopped out before the market actually goes in your direction. I've noticed 3 common mistakes many traders make when using the moving average. All 3 of them must be avoided at all cost, because these often lead to you losing money. Alright, mistake number 1 is that the moving average is often viewed as the only thing to pay attention to. Therefore, the trader misses the complete context of the current situation. Furthermore, other market behavior is often completely ignored. This often results in the problem that the market just rushes through the moving average without turning around. Never forget that the moving average is not the holy grail, but just an indicator. The best thing you could do besides looking at the overall market situation is to wait for confirmation after the market touched the moving average. Here on the right-hand side you can see an example of waiting for confirmation after the market hit the moving average. The move that leads toward the moving average got broken by a bullish candle. This increases your chance that the market might actually turn. The benefit of this type of confirmation is that it does not delay the entry too much. Okay, let's talk about mistake 2. As you have probably already noticed, the moving average shouldn't be used in sideways markets. But what about trend trading? While using the moving average for trend trading can be helpful, there are some things you must consider. If you want to trade the trend using the moving average, you must read the trend as well. That's what most traders don't do, and so they end up losing money. The moving average is the most helpful at the beginning of a trend, when the trend channel is fairly tight and pullbacks aren't too deep. But once a trend loses momentum and the pullbacks get deeper, it is dangerous to keep using the moving average for entries. The right-hand picture is a good example of a trade that lost momentum. Even if the market hits the moving average again, and even if you wait for confirmation, the chances of making money are fairly low with a weak trend like this. Here's a better example of using the moving average when trading the trend. The trend is fairly new and still in a tight trend channel. The pullbacks aren't deep and the market makes new highs with good momentum and strong bullish candles. Using the moving average in a situation like this is much more reasonable. The last major mistake is that you copy a moving average strategy without individualizing it. What do I mean by this? When you copy a strategy, most often you only get the entry criteria. But the entry is just a tiny part of your trading strategy. There are many more things that have a big impact on whether you are successful trading the moving average. But these things are often highly personal. Before even thinking about the entry and going long or short, you must think of what it is that you want to trade. And I don't mean what market to trade, I mean what you expect the market to do after hitting the band. Do you want to trade the trend and use the moving average as your entry? Or do you want to trade a single market move that might start at the band and goes on until the trend makes a new extreme? If you can't answer that question, you won't know how to place your stop loss and take profit. Neither can you know how to actually manage the trade after entering. Let me give you 2 common examples. First, let's say you want to use the moving average as your entry point, but then continue trading the complete trend. If that's your goal, it probably makes no sense placing the stop loss close to the band. Because if the market pulls back deeper than the moving average, then this is still valid and shouldn't stop you out, because remember, you are trading the trend, and as long as the trend is not broken, your trade is still valid and should stay open. Let's look at the next example. Say, you are betting on a market move in the direction of the trend after the band got hit. If that's your goal, then you should place your stop loss closer to the band to get stopped out in case the market does not start the strong move you expected. You might even want to use a trailing stop loss once the market moves in your direction. You see? Using the moving average is highly individual. You must be clear about your goal and what it is you are betting on. Then you can go ahead and choose reasonable places for your stop loss and take profit. Furthermore, you can optimize your risk-reward ratio to a value that is comfortable to you. In short, please don't just mindlessly copy a strategy that you see. Instead, check how you can make the strategy fit your unique trading style. Alright, that's it for today. If you are interested in more advanced trading education, feel free to subscribe. See you next time, bye.